Hey everybody, my name is Brandon from thestockstreams.com, and today I want to talk about FSLY stock, ticker symbol FSLY. What I want to do first is I want to go into Google and talk about how FSLY dropped over 30% in just a couple of weeks. And then I want to go into the earnings report to talk about how FSLY is doing as a business, and then I want to go into the trading charts to see if there's a level or two to buy FSLY stock if we want to buy FSLY stock. So now let's get started. So here we are in Google, and here's a 6-month view of FSLY's trading charts here. And as you can see, in about a 2-week period, we dropped off about 30% from the peak that we made back in early February. So the question is, why did FSLY drop over 30% in just a 2-week time period? So if we scroll down here at the news, we see that a lot of people are talking about fears of revenue growth and net loss. The reason for this is because the guidance from the most recent earnings call seemed to suggest that management was expecting revenue growth to be decelerating slightly from about 40% to the mid to lower 30%, but the projected annual loss per share was larger than expected. To me, firstly, I don't think projected loss per share is a good enough reason to jump ship out of the company, but I think that the slowing revenue growth says a lot about the overall cloud computing sector, which is really the bigger point that I want to make here. Even though I think the cloud computing space in general could see decelerating growth year over year because of the pull forward effect, which we'll talk about later, I still think that we will see substantial growth over the next few years. We are in the age of data. I am a firm believer that in the next few years, data will be as important as oil. I'm talking about the collection of data, analyzing data, and using that data to make educated and predictive models for everything. This is why I believe cloud computing companies like FSLY or Amazon will be incredibly valuable over time, because we need these companies in order for us to analyze and store the data that we collect. As a side note, this is one of the reasons why I'm pursuing a graduate degree in data science from Harvard Extension School. I believe that in the future, knowing how data works and how you can use data will be an incredibly important step to understanding how the world works. Even though I already have a master's degree in biochemistry, I believe a key part of continual success is a continual learning about the world around us. Even though I think that data and cloud computing will be the next big thing for the world, the concerns of the pull forward effect should not be underestimated. Because of the health crisis since March, a lot of the people have realized the importance of cloud computing, already investing in the space and already beginning to migrate their business models to incorporate the potential benefits that cloud computing brings to the table. Because of that, companies like FSLY were able to grow revenues at an incredible rate, over 40% year over year, which we'll see in the earnings report. However, there are definitely arguments that can be made that these sales were borrowed from future years. Basically, the concept is that instead of a steady adoption of customers over time, a huge majority of their potential customer pool decided to join all at once, thereby not having enough people left in the pool for future deals. While I do believe that this is partially true, that there are now fewer people in the pool to be able to create future deals with, I still think that FSLY and other cloud computing companies will be able to grow at good rates for the years to come, even if the rates are not as dramatic as we have been seeing over the past year. So with all that said, let's take a look at FSLY's fundamentals by going into the earnings report so that we can see how FSLY is doing as a business. So here we are in FSLY's most recent earnings report, and they give us a nice year-over-year view for the quarter ending on December 31st, 2020. And the first thing that I'm noticing is the very impressive revenue growth year over year. I mean, this is like a 40% increase in revenues, which to me is pretty good. However, what's even more impressive to me is that it appears that FSLY is able to grow its profit margins, even when they are scaling up their revenues by 40%. We see that last year, when we calculate in the cost of revenues here, which was $25 million, we were able to capture $33 million of this $58 million revenues. So we were able to capture about 56% of the revenues. However, this year in 2020, we were able to capture about 59% of the revenues. So what this is telling me is that Fastly is operating very efficiently on their core business, allowing them to scale up without encountering inefficiencies that drop their profit margins. We also see that we are in a very high profit margin business, and that is what I like to see too, because that means that we are able to keep more of this gross profit so that we can reinvest that revenue back into our business. To me, Fastly's revenues and margins look pretty good. However, the operating expense block here, that leaves a little bit to be desired. We see in the 3 sections of the operating expenses, the research and development, the sales and marketing, and general administrative, all 3 of these guys are really exploding year over year. As always, the year over year increase in research and development doesn't really concern me that much, because I like seeing that they are willing to reinvest in their technology so that they are better positioned for the future. However, the real concern to me here is the general and administrative spending. We can see that this spending is increasing over 275% year over year. And to me, I don't think that the return on investment is as good as if you were to spend this money on research and development. General and administrative is money that is spent mostly on the back office items, like lawyers, like accountants, or paying for the expensive corporate team building trips to Hawaii. To me, even though this general and administrative spending is important, I'd rather see this money reinvested into the business and products through research and development. For Fastly, because we really are at a net loss here, we don't really have any earnings, we can only compare price to sales ratio. Calculating Fastly's price to sales ratio using this annualized revenues here for the year, we see that we are at about a 30 price to sales ratio. For comparison, Akamai Technologies, a pretty well-known and established competitor in the same space as Fastly, is trading at about a 5 price to sales ratio. That alone should tell you that Fastly is trading a bit expensive right now. However, there are good arguments that can be made, because Fastly is growing fast, that our fundamentals could catch up to the valuation soon. The risk that you play is that Fastly's fundamentals does not catch up to the valuation soon. The management has told you in the earnings report that revenue growth will slow. So that is just another risk that you have to consider before investing in Fastly. So with all of that said, let's head on over to the trading chart to see if there's a level or 2 to pick up Fastly if you want to invest in Fastly. So here we are in Fastly's trading charts, and as you can see, in just a couple of weeks, we fell over 30% from our peak here back in early February. Actually, if we look at the support and resistance levels for the stock, we are right at a nice support level at around this $80 mark, made from the bottom of this candle as well as these candles over here. To me, it looks like we are really at the bottom of a trading range that we've been in since early July here, from this $80 level up to around the $110, $120 level here. Again, I've said this before, I really like when stocks are trading in big ranges like this, because I can pick up a stock at the bottom end of the range and really trade it back up and sell it once it hits the top of the range. Now, with that said, if we do break this $80 support level here, then I think the next support level that we will see is around here near the $60 level. But for me, when I analyze that I have about a $20 downside to about a $30 to $40 upside, I like the risk reward for the trade. I also like the fundamentals of Fastly, particularly the revenue growth and the consistency of high profit margins. I am considering the risks of the growing operating expenses and potential slower growth rates, but for me, I do like the risk reward for a trade here. I did open up a position with a couple shares actually on Friday, but I didn't put in my full position yet. The reason is because, like I said, if we break this $80 support level, then we still have some downside risk here. So if Fastly keeps dropping, I would want to have some cash on the sidelines to average my cost basis down. But again, this trade fits my own personal risk tolerance. You may have a different risk tolerance that this trade might not be a good fit for. You should come to your own conclusions and analyze your own risks to see if something like this is right for you. Just to cover the other major indicators here, the MACD, which is a measure of momentum, if we zoom in here, we see that the MACD is really negative, which is a bearish sign that says our short-term momentum is weaker than the long-term momentum that we are normally seeing. However, if we look at the RSI here, which is also a measure of momentum, we see that we just poked our head into the oversold territory, and that's normally a bullish sign for me. I like when stocks are in the oversold territory because that is an indication that the stock is on sale, and I do like to get my stocks cheap. However, before screening stocks solely on the RSI, you have to consider why the stock is oversold. As always, these are just technical indicators. To be a good investor, in my opinion, you need to consider both the technical indicators as well as the fundamentals of the business before you decide to invest in a company. So that was my review on Fastly stock. Let me know what you thought about it in the comment section down below. If you have any questions or if you caught any mistakes, also drop me a comment down below. If you liked the video, please like the video. If you haven't subscribed yet, please subscribe. And as always, thanks for watching and I hope you have a great day.